Good evening, all. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Thursday, the 20th of January, 2022. A pattern's developing. The market's starting off in the morning with bids. The stock indices have gone up the past 2 days, and by the end of the day, the market starts tumbling in the latter part of the session and just releases itself. So what the market has been fighting is this a buy the dip? And you feel that way first thing in the morning, and you'll see the TV announcers talking that way, or has it become really a sell the rally? I think the sell the rally is winning because you keep making lower lows in the stock indices at this point. Why is that occurring? The Fed action. The Fed talking of 3 interest rate hikes, maybe 4. Market analysts talking the same. Then they're talking of running off the balance sheet. They're talking of doing away maybe even quicker with the QE. I don't know why. If you're looking at the economic data, you're watching in the payroll claims, the jobless numbers, and I'm talking the weekly jobless claims, they're rising, they're not falling. If you've been looking at the data from the Philly Fed, it improved. The New York Empire State was not a very good period just a couple of weeks ago. So we're still floundering here. So the market, it acts heavy. That's the right way to say it. If we take a look at what Freeport-McMoran did, take a look at how the market is now breaking down again. And with that breakdown, if you take out right here, 4206, you got to get nervous that you're going to go further down because you'd have a higher high, lower low pattern. As it is, it's still in an uptrend, and that could kick you down here. So did I say 4206? It's 4306. I apologize for that. So if it takes out 4306, you're probably going back to at least the 18-day average, if not a bit lower than that on the market. What's holding the market back is just our old friend, the Bollinger Band. And if you haven't yet taken my enhanced Bollinger Band course, I want you to do so. How? All you need to do to get over to that is take your cursor, come on up, push it there, and at that point you'll see an icon show. At any point during the show, click on that, and it'll take you right where you have to go to learn about all that. But suffice to say, the market should fail there, and it is. It hasn't turned into a downtrend, and frankly, it can't on this pattern. I don't see how it possibly could. Even if you take that out, you have a higher high, lower low. So you can leave the pattern of bullishness, which I think is what the market's doing, while it's correcting a market that had been overbought. If I just come back on this, any numbers over 70 in the slow stochastic here, that's an overbought condition, so you're correcting that right now. Now, could the market hold here and not take out 4306, which is 13 cents lower? Yeah, it could. So, got to wait and see what it does. Apple's getting beat up pretty good, and you can see the lower highs, lower lows, riding the lower Bollinger Band. Now, if it wants to go out in a grand fashion, it could make a run to the 100-day average. It does not have to. It's already oversold. It's hit its targets, and I think the pros came out on the first challenge of the lower Bollinger Band, but they're not buying. There's no reason to be a bottom picker on that chart. In XLF, well, you just went through and closed under the 100-day average. It puts into play the possibility that if the market wants to extend the break, first, this black line that I'm pointing at is the Bollinger Band. The gray line is the 200-day average. You could certainly get down there. And the market acts like it wants to. There's the thrust you're getting to the downside. So when did this trend end? Let me show you. See this settlement at 78.58 right through there? That was on January 14th, last Friday. That was the signal you can no longer be long, because when you lose an embedded reading, and I'm going to say this again, take this course. It's only, I think it's 8 videos. You're going to learn an awful lot. You're going to get a master's degree, maybe a doctorate in it. The odds favor you're going back to that 18-day average. That's a big edge. And you can see what the market's done. Could it slip slide further? Of course it could. I mean, it's not about trying to pick a bottom. It's about getting on longs at that point because the momentum has left the market. In Disney, the trend is down. Again, you're under the lower Bollinger Band oversold. I'll let somebody else do that. I said to you yesterday, I said it in my morning updates, as long as Jets, the ETF, is doing poorly, why do I want to own this? How do you get to Disney? Think about it. When you own meta platforms, I love that they call that. It's Facebook to me all the time. Lower highs, lower lows. This metaverse and all that. These names are nonsense. I think it was one of the great blunders changing the name. But in any case, lower highs, lower lows, 314.72, an important area. You're not there yet. That's the lower Bollinger Band. Do you have to hit it? Of course not. What would be a sign on this chart that it's overdone and it wants to stop this decline? Today's high. You have an outside day down. If you take out the high of an outside day down, this is my rule. Within 2 trading sessions, you generally go back to the main moving average, but more than that, you lose the momentum that you'd been going in. That's what I'd be looking at. Then we get to the industrial sector, which you're back down into key numbers. Now, I want you to look. Yesterday, you went to the 100-day, the 200 was right under it, and the 18. Are we trending? We are not. You have a higher high, lower low. The whole uptrend ended when you lost the embedded reading again, right here, but this was the target. It already hit it. Then it just started giving you additional parts as it fell apart again here. And now the question is, what do you do as you're down to the Bollinger Band, the key moving averages, which it went through? You do nothing. Enjoy yourself. Let the other guys play with it and drive it to wherever it's going. If we get new signals, fine, but this is what I call not high probability trading. In the semiconductors, they're getting beat up. Everything's getting beat up right now, so it's not unique to anything. Value stocks might be your best hold for a while because they're still going to beat these up. But now you're getting down to the interesting spot, the 200-day and the lower Bollinger Band. We identified here that this wasn't holding, the 100 and the lower Bollinger Band, which normally does. That gave you that maybe you were going to run here. Remember, we used the term the other day, gorilla glue trade. Did you lock yourself in on those Bollinger Bands? It's exactly what the market has done. But you're oversold, you're approaching this, there's no way to embed right now. Be careful, this could be where the pros just go, I want to take money off the table. Same thing in the housing stocks. This is the gorilla glue trade. It's not even paying attention to the 200. I don't know where the market's going now. I don't know how deep this wants to break. We're watching mortgage rates go up. We're watching home sales slip a bit. You got those figures today. They were about a 5% miss in the marketplace. And you can see that we're weakening. Okay, we're still January. This isn't the hot market generally in a great swath of the United States where you buy, but it starts getting that way February and March. The buyers start coming back to the market as long as you don't have a stock market that's tanking away and scaring the hell out of people. And if that happens, they won't buy anything. They just hold on to their money. Energy sector, as bullish as it has been, you're starting to flash major warning signals here. Now, what rules the day is always, in my opinion, this, the embedded reading if you have one. So until the red line closes at 79 or low, it's got to be under 79. If that happens, then I think you're going back to 60-23. Couldn't tell you the reason why. I'm just telling you that's what the momentum play is. As a chartist, it's no longer in the uptrend, but this still rules the day. And until that's lost, it is not saying that this market has to return to this number. Excuse me, GDX. Okay, you get up to the upper Bollinger Band. And here's what happens when this occurs. Every late Johnny-come-lately is now a gold expert, and they want this market's going to go. How could it not go? We got inflation, the stock market's breaking, blah, blah, blah. Sucker time, sucker time. When you buy over Bollinger Bands, the odds favor you're going to get your head handed to you. And that's probably what's happening. I am not saying you're not in an uptrend. You are. But not up there. I like buying back into the key averages, the support zones. What about GLD? Same thing. You don't buy the upper Bollinger Band, and you're not trending here. You still have a lower low, higher high. So, no, I can see the bias is up, but I wouldn't get excited. One of my favorites has been the mining stocks, and I think I've been very adamant. I don't want you to be long this market. Now, there's no reason. This was the area to be long. When it lost the embedded reading, one of the tools that I keep telling you, move your cursor up there and learn about it. When you lose it, Bingo. That's, for me, is the end of the game. Often, momentum leads price. Not price leads momentum. It's the other way. Momentum was lost, it's hidden. And all of a sudden, you start working your way back down. And I know you're going to tell me, you're wrong, Ira. I don't think I'm wrong. That's what happens. So price can play games with it, but when I see that going on, it's a big what to do. Copper, as bullish as I am copper, be careful. You're flirting with losing the embedded reading. When you lose it, I'll be scared. But when you hit a Bollinger Band, you're supposed to take profit. So this market has been embedded. You can see what's going on. The profit number off the breaks is, again, the Bollinger Band. And now you're just holding, waiting to see, does it give you a big enough drop after an outside day up, down to do anything. I have a set of rules when you make higher highs first before a break occurs. Take the enhanced course. TLT, I was telling clients, whether I'm right or wrong, that I thought the rally today was going to be where the pros sold the market. We'll see if I'm right. That's because you have an embedded reading, and until the red line closes over 21, I think the market's got an easier time going down. FXE, well, you know, I told you that I did a special report on the dollar index. It finishes tomorrow at 3:30 in the afternoon. It's off our website. Everything we do is automated, so it'll be gone at 3:30 in the afternoon. You want to look at it. The dollar threw out a buy signal today. This threw out a sell signal. So in order to negate it, you've got to take out yesterday's high on this, which is 105.52. If not, the odds still favor 104.52 is in play. Doesn't mean that that's going to work or not. I'm just telling you what I'm looking at in the currency plays. And that's where what I do in the morning, first thing, helps a lot of traders. Typically at 9:05, I start recording a video that's 18 to 20 minutes long. Every weekday I do that, Monday through Friday, barring a holiday, obviously. And on Saturdays, I like to do a weekly where I cover the longer term charts for the bigger chart picture. Not everybody likes the daily charts. A lot of traders want to look at the bigger picture. The weekly can help you do that. But in the morning, when I'm talking, I'm covering most of these markets, but I'm rotating. Remember, I'm asking you to write me, and you put it out there on the YouTube channel, which markets you want me to rotate, and I do. I'll bring in different charts now. Each week, they're only good for 5 days, the lead chart, and I'm going to be replacing them on a regular basis. I think it makes it more interesting. But I'm going to keep a lot of the others in there because they're so important, and at the end of the day, this is all about ETFs and spiders. I mix it up with about 4 or 5 stocks. You've asked me to do that, so that's what I do. But when I cover all this, it's specific in the morning. Buy here, sell there, here's the stop, here I'm wrong. It'll be from the embedded trades to regular trades. But I always start you off with the morning news. And the news is the economic data that's come out, the importance of it, what the market was looking for. Folks, think about it. You're getting 24 videos every 30 days. $8.95 to give it a try. There's no contract. You can stop whenever you want. Your management's right on our website. You can expand. You can go to yearly videos. You can go to pages by the month. Any way you want to do it. And a lot of people upgrade to look at the futures with it. Give it a try. Just go to our website, market research, IraEpstein.com. You can't beat that. I'm Ira. Have a great day.